Hello everyone, my name is Srinivas. Welcome to my YouTube channel Algo Trader. First of all, happy Diwali to everyone. In this video, I have come up with a Diwali gift for you. That is nothing but a swing trading strategy based on simple indicator RSI. This is long only strategy. This strategy is only for the long-term investors or the traders who do long-term swing trading. This strategy is not for the intraday traders or who are expecting some strategy on options buying, selling, or somebody is looking for multi-bagger returns in small cap and mid cap space. This video is not for you. There are a lot of other videos on the YouTube which are thrilling, entertainment, and exciting ones out there. You go there and have fun. This video is not for you. Okay? When I say long-term investors or long-term swing trading, that means one has to follow a strategy on long-term basis with minimum of 10 years. Okay? One important thing I would like to tell on this strategy is this strategy has only 25% win ratio. That means if you take any trade, there is a 75% probability that you will lose the trade and only 25% probability that you will win the trade. Okay? If you're still watching, let me give you some background about this strategy. Few weeks ago, I got a thought to create some strategy for all the retailers that actually works based on few important factors. One, it should be manually tradable, simple strategy. Second, one has to spend very less time in the market in order to execute this strategy. Third, it should beat the index returns over the long period of time. That is, you can consider over 10 years or 15, 20 years time frame. So this was the idea I started with few weeks ago, and I've been working on the same. Initially, I tried with 5 years, 10 years. I was getting very great result over the recent 5 years time. But later, when I extended to 10 years, the strategy gave some different results with the drawdown was increasing, and some things were not good when I keep on extending it to more years. The strategy, I was changing this rule, that rule, stop loss, target, trailing is sell, and whatnot. There's so many things, and I thought I came up with there's a good strategy. I was working from 2010 onwards, so then I thought, why should not I include the 2008 financial crash situation, right? So when I actually included 2008, results went horrible. I mean, the drawdown went almost more than 50%, near to 60%. Okay, then again I had to modify the strategy. I had to do so many iterations. I had to satisfy the conditions to many years, like starting from 2004 till 2024, for the last 20 years, there are different market cycles, different behaviors over all these years, right? So 2008 crash is actually big bear market, and after 2010 we have different markets. 2018 there's a mid cap fall down, and in 2020 there's a corona. It's altogether different scenario, and of course the recent time period is going good. It's like a bull market. So whatever it may be, the strategy has to satisfy all these market cycles, and it should be profitable with the 3 rules I mentioned. That is, should be easy, manually tradable strategy, right? Second, one has to spend very less time in the market. Third, it should beat the index returns. Okay? And finally, I have come up with some strategy based on all these conditions to be satisfied. Okay? If you're still watching, I'm assuming that you're a long-term investor or long-term swing trader. So in this case, please watch the video completely till the end without missing even few seconds of the video, because I'm going to cover very crucial points throughout the video. If you miss something and start using the strategy, that will negatively impact you. I really do not want that happen for you. Okay? Off knowledge is more dangerous than no knowledge. Either watch the video completely or don't watch it. Thanks for understanding. Let's get into the details of the strategy. As I told you, the strategy I'm going to discuss is completely based on RSI. Let's understand what is RSI first. RSI stands for Relative Strength Index, which shows the strength of a stock in the market. This indicator oscillates between 0 and 100. On the right hand side, a chart of Dabur India Private Limited shown. This is a weekly chart. The upper portion of the chart shows the candlestick chart and the bottom portion is nothing but RSI chart that oscillate between 0 and 100. We assume that when a stock is trading above the RSI level 70, that is in bullish trend, and when trades below 40 or 30, we can assume that it's in a bearish trend. Okay. Coming to the strategy rules, we are going to trade in all the Nifty 50 stocks. Time frame is a weekly chart. Indicators only RSI, nothing else. The basic idea of this strategy is we are going to buy a filtered stock at the close of a week, that is on Friday or on Thursday if Friday is holiday. Just before the market closes, that means between 3:15 and 3:30 p.m. we analyze the stocks, we filter out the stocks based on the rules, and whatever the stocks selected for trading, we are going to buy them at any price between 3:15 to 3:30 p.m. But in the backtest, I am going to consider the closing price of the week. Generally, the closing price of the week is more or less same as some price between 3:15 to 3:30 p.m. except some rare cases. Okay. Yeah. What are the two conditions for the stock selection? The current week candle and the previous week candle should be in green color. Okay. It can be of any type. It can be doji, it can be hammer, nothing matters. The only thing matters here is it should be green candle. That's it. Both candles, previous week candle and the current week candle. And the current week RSI should be greater than 60. Okay. We select stocks based on these two conditions. Okay. There can be more number of stocks satisfy this condition on a particular week. But we are not going to trade in all the stocks, correct? There should be some limit. We restricted max number of stocks to be in our portfolio at any given point of time is only 10. Okay. For example, you are starting this strategy today. Assume that today is Friday. You got some 12 stocks based on the rules to be traded, but you are not going to take 12 trades. Okay. You are going to take only the max trades, that is 10 trades. But how do you select those 10 trades out of 12 trades? Okay, based on the one more condition. So what are the filtered stocks? You just sort all the stocks in the descending order of the RSI value. Let's say some stocks have RSI 61, 63, 70, 74, 80, 85, whatever. Okay, you just sort out based on the higher value to the lower value. Okay, and we pick the top 10 stocks and we trade in those stocks. That's it. Buy the filtered stocks at the close of the current week. Yeah. Then what is the stop loss? The stop loss is the minimum value of the current week low and the previous week low. Let me tell you how to choose the stop loss here. Okay. This is assume previous week candle. Assume this is a green candle. You have like this. Okay. And assume there's a current week candle like this. Yeah. So generally we are going to at the close of the week. And our stop loss is the lower of these two values. So in this case, this value is lower. So this will become our stop loss. So take another case. This is current week. Right? And this is next week candle. Assume both are green candles. Say this low is lower than the previous week low. Okay. So in this case, our stop loss will be whichever the point is lower, that will be our stop loss. This one will be our stop loss. Understood? And there is another thing to be considered in this strategy is there are some cases where the weekly candles are very small. Assume that the weekly candle itself is just 1%, for example, and your stop loss will be just 1% far from your entry or even less than that, correct? So there's a high chance of hitting your stop loss as soon as the next week opens. So for that matter, what we are doing here is we are going to have minimum stop loss percentage from our entry point, that is 2%, in case the low value decided based on the candle low is less than 2%. Okay. Similarly, there are cases where there may be a very big weekly candles, and if you look at the low of current week or previous week, that may be, let's say, 20-30% far from our entry, correct? That will be the huge stop loss. In this case, we are going to restrict the stop loss only to 8%. That means the maximum stop loss we keep in this strategy is just 8% from our entry price. Okay. Trailing stop loss. We are not going to trail the stop loss. Okay. And the target. This is surprising, of course, true. The target is 10 times of our stop loss. For example, your stop loss comes as a 4% from your entry point. Your target will be 40%. If the stop loss is 8%, then your target will be 80%. Yes, you have to wait till your target comes or your stop loss hits. There's no other way. Okay. And as I already told you, make sure there are only 10 active trades present in your portfolio at any given point of time. So another important thing I would like to explain here is, say in the previous week, you selected some 6 stocks, correct? And your portfolio contains the 6 active trades. Assume that none of them hit stop loss or target in the current week. Okay. And in the current week, you selected 6 more stocks based on the rules mentioned here. Now, how many number of trades I should take? I should take only 4 trades because 6 trades are already active and I have room for only 4 trades more. So, based on this criteria, you select the top 4 stocks and enter into those stocks only. Now, there will be 10 stocks when you look at the current week close, right? And in the next week, for example, even though you got some stocks to be selected for the trading, since your portfolio is already full, that is 10 stocks, you are not going to take any action next week. Okay. And just continue the same thing further. Only when a stock exits from your portfolio, either by hitting SL, either by hitting target, there will be a room for 1 or 2, 3, a number of stocks, correct? And you are going to fulfill this room based on the stock selected in the coming weeks. I hope you understand this concept. To code this one, it took a lot of time. Now let's understand what is the capital allocation and risk factors involved in this strategy. So in this strategy backtest, we are going to assume the total capital is 10 lakhs. The maximum number of active trades, as I said, at any point is 10 trades only. Okay. We are simply dividing the 10 lakhs by 10 and going to allocate 1 lakh for each stock. Okay. So whenever you enter any trade, we are going to buy that shares worth 1 lakh rupees. That's it. There's no leverage used here. Okay. Don't use leverage. Max risk per trade. So since we have the max 8% stop loss and a single trade, the max risk would be 8% on 1 lakh, which is 8,000 rupees, subject to the fact that there is no gap down open happen below your stop loss. So it's not intraday, right? It's a swing trading. So it's obvious that there can be scenarios a stock can directly open below your stop loss. That can actually give the more loss in that particular trade than the predefined loss of 8% or 4%, whatever it may be. Okay? That is common. You have to accept it. Max reward per trade. So our target is 10 times of the stop loss. The max reward could be 10 times of max stop loss, which is 8% into 10, that is 80% on a single trade. So there can be trades gives you 80,000 rupees on 1 lakh capital allocated for that trade. Let's practice the strategy on some sample data and we'll validate few trades on the real charts to check the correctness of my code, whether the trades are correct or not. Okay. Here first I'm going to choose the backtest period as only this year, 2024 Jan 1st till date. Let me run the test. Yeah, here the backtest result and look at the trades that taken place in this current year. Yeah, so look at there are around 18 trades and out of only 4 trades target hit and the rest all trades are SLC trades. Of course, the win ratio of this strategy is very less, as I already told you. Let me validate some trades here. Start and end. Let's take Nestle India. Go to the charts here. Yeah, it's a weekly time frame and RSI 14. So the trade took place on January 1st, correct, at 0.2666.4. So yeah, this is a candle. Yeah, the closing price is 2666.4. We took the place exactly at this point. Whether the conditions are getting satisfied or not, let's take. This is a green candle. Of course, a doji kind of stuff, but it's a green. And the previous candle also green, and the RSI is above 60. That's why I took a trade at this point. And the stop loss is the low of previous candle or the current candle, whichever is lower. So in this case, the stop loss would be the low of the previous candle, which is 2536.5. So if you look at the chart, the stop loss got hit somewhere here. Okay, in the next, maybe the next candle itself after taking the trade. Let's see. Yeah, in the next week candle itself, the stop loss is 2536.5. Okay, the stop loss in this case was around I think 4.8%. Okay, and let's take some other trade. Let's say consider this target hit trade. Trend. Let me just go here. Yeah, trend weekly chart again. So RSI is greater than 60, and Jan 1st we took the trade, correct? Okay. Yeah, this one, this candle, okay, 1/1/2024. This candle is first week of Jan. So the closing price here is 3065.55. Let us check. This is a green candle. The previous is also green candle, and RSI is above 60 in this case. And whichever is low of this current candle as the previous candle will be our stop loss. This is previous candle 2961 and this is 2940. So this case our stop loss will be 2940.75. Let's see. The entry is 3065.5. Okay. Here the entry is 3065.5. Correct. And if you look at the chart, yeah, we entered here. This is low 2940. See, the stop loss didn't hit. It's 2955 low here also. So the trade went continuously up. Somewhere I think it target. Let's see what is the candle. And April 22nd weekly candle. If you look at this, here the target hit at 4313.55. April 22nd weekly candle. Let's see. This one. Yeah, this one. So the high of candle 4373 this way. So, but our target is 4313. Yes, that's correct. And let's validate some of that SLE trades here. Let me just take ICICI Bank. Yes. ICICI Bank weekly candle. So when the trade was took, it's on July 15 that trade took place. Okay. July 15th weekly candle, then this one. So look at the rules. The current week is green, the previous week is also a green candle, and the RSI of the current week is above 60. Here the closing price of the current week 1248.65, and the low of the current candle previous week candle, whichever is lower stop loss. In this case 1216.9 is our stop loss, and the entry point is 1248.65. Let's see. Entry is 1248.65 matching, and exit 1216.9, which is actually our stop loss. So the stop loss hit in this case. See, when the stop loss was hit, 22nd July. I mean the next week candle itself, the stop loss hit. So let's look at again. We took the trade. Yeah, this candle 15, and of course the next week itself hit the stop loss this low. Okay, cool. So whatever code I have written looks correct. Okay, when we look at the sample charts or real charts, sample data over the real charts. So now we are going to backtest for the entire 20 years, that is 2005 to 2024. Let's see the real game now. I'm going to change the start time to 2005 January 1st till date. Let me run the back test. Yes, the back test has run. So if we look at the overall statistics, or capital 10 lakh. So there are around 384 trades took all these 20 years. Only 384, right? Target hit just 98 trades and SL hit trades 286 trades. The target to SL percentage is just 25%. That's it. So it's a very low win ratio strategy, but it gives wonders because the risk to reward ratio is very low. I mean, the reward is very high, but risk is very low. One risk and 10 times reward. Okay. So max loss per trade here is minus 15,000. So ideally, our max loss should be 8,000 because we are not going to take max stop loss more than 8% on a single trade. Correct? But why it happened? Why max loss of a trade is showing more than 8,000 here? That is because there can be gap down scenarios where a stock can open below your stop loss level, right? For example, let me explain the board. So this is assume that you entered somewhere here. This is your assume you entered somewhere here and this is your stop loss. Okay, sell. So now the market moved over the few weeks like this, somewhere here. And if there is some candle like this, right? For example, like this. So in this case, the candle is passing through your SL. That means obviously you are able to exit the predefined SL, right? But there can be cases like, for example, after some days, the candle directly opened here. Okay, the opening here, correct? Assume that this is below your SL level, right? Now, when the candle opens directly like this, you cannot exit at the predefined stop loss level, right? The price already moved below your stop loss. We don't take any risk. We just exit at whatever price we get because as per the rule, you have to exit the trade because it's below your stop loss. So in this case, ideally, we can mark this price, this open price as our exit price, but I'm not considering the open price as our exit price because there may be situations that you may not exit at an open price because there's a gap down case and stock suddenly can go down. And of course, suddenly can come up. We don't know. But on the safer side, what I am taking the exit price as 1% below the open price. Okay. So in the back test, I have first of all identified the situation where the gap down case is and also pointed the exit price below the open price, 1% below the open price, 1%. Okay, I think this is a safe side to be considered in the back test. I hope you understand. Okay. Yeah, now looking at the summary report. Yeah, this max profit per trade is 80,000 because our max SL is 8% of any trade and our target is generally 10 times. So there are some trades resulted into 80% of the profit. Okay. And forget about all this, the number of last month 104 profit months. Okay, these things doesn't matter in the long run because this is not intraday strategy, it's a swing trading or a long-term investing strategy. So ideally, we should not look at it. But the main things you can look at this max losing stake loss. You can assume that drawdown of 25%. Okay, in this case, and yes, the total profit basically 48 lakh 75,000. But the reason is we consider 10 lakh every time, right? We have not compounded. Okay. Let me, if you look at year wise, right? So 2005, 6, 57%, 19%, 2020% profit. Of course, in 2008, of course, there might be a drawdown of 25%, but the end result of the year is 13% down. And there's a 91% just after that, then 37, 13, 41, 30, year 3%, 38%, 30 minus this is 1.8%, then 9%, 25%, 9%, 14%. Yeah, it's keep on going like this. See, most of the time, many years are in profit except few years, year 2008 and 2018. Okay, let me also check the Excel report of the same. I'm opening the Excel report of this, the same data here as well. But this time I would like to compound what will happen. Okay, so this is a year-wise P&L from 2005 to 2024 the strategy. So our capital every time we consider is 10 lakh. Okay? Let me first calculate the returns in each year. Okay, this 100 into this divided by this is $C and $1 because fixed value here. Okay, so let me also put a round to only 2 decimal places. Yeah, 57.57. We just scroll down. So if you look at different years, we have the returns like this: 19, 20, minus 12, 91. Yeah. So let me just take insert. Yeah. Compound. Okay. Compounding. Initial capital is 10 lakh. Just like this. This is initial. And I'm going to apply the formula. Let's say around this place. Current outstanding plus the returns on current value. Okay. I'm removing the decimal part here. So initial capital is 10 lakh. After 1 year in 2005, because of 15.7% profit, became 15 lakhs around, and I'll just scroll down till here. See what will happen. So 18 lakh, 22 lakh, 19, 37, 51, 58. See. So if you look at after 10 years from 2005 to the end of the 2014, that's 10 years. So it turned into some 1.27 crore. That basically 12 times, correct? Awesome. That's not bad. And if you look at from 2014 to 2024, this is I think almost 9 years or 10 years, whatever it may be. It turned into this one, 5.6 crores. Overall, in the 20 years, the 10 lakh capital turned into 5.6 crore. Okay, let's calculate what is the CAGR for this. Okay, let me just copy this. Go to CAGR. Yeah. Yeah, let me put the initial value as 10 lakh and our end value is 5.6 some crore, right? See, and our period is 20 years. Okay. So this strategy gave 22.31% CAGR over the period of 20 years. Awesome, right? Of course, we beat the index. Good. So let me also try on a different list here. Instead of Nifty50, let me try to backtest the same on Nifty Next 50. Instead of Nifty 50, I'm just saving this. Let me just save this report. Okay. So now let me backtest again on Nifty Next 50 list. I'm running the backtest. Yes. Okay, here is the result. In 2008, of course, this gave less. This is better returns. Compared to Nifty 50, you got just 6% loss in 2008. But let's look at the drawdown here. I think the max streak, losing streak, yeah, 22%. So this is more or less same. Either this Nifty 50 or Nifty Next 50. The max drawdown went up to, you can consider 22 or 25, whatever it may be. And let me just open the reports again. Just latest generated report. This one. Yeah, let's calculate again. Let us calculate the compound rate. Okay. Compound interest was this is 10 lakh our initial capital, and this is a percentage on each rate, round of 100 into this divided by this into 2 decimal places. So this is the percentage in each year we got on over Nifty Next 50 stock. I'm sorry. So I have to put $C $1 here. Okay. Let me just scroll down till here. Yeah, we got returns like this in each year, and let us compound. Initial value is 10 lakh. After 1 year, this will become of this plus this value into the percentage we got in that year divided by 100, 0 decimal places. So it's 17 lakh after 1 year, and if you just scroll down till here, yeah, look at this. So the money got in case of Nifty Next 50, I think in 10 years, even maybe, yeah, in 10 years, this got more or less same to Nifty, similar to Nifty, 1.28 crore from 10 lakhs, right? 12 times. But compared to Nifty Next 50 gave more returns. Here, if you look at the final picture from here to here, so again, it's almost 9.2 crores. So maybe around 12.8 in last 10 years, it is 7 to 8 times. That's really phenomenal, okay? And if you look at the start point at 2005, 10 lakh turned into 9.2 crores. If you just follow this kind of strategy in 20 years, okay? Let's calculate what is CAGR in this case. This is the end value. Let me go to the calculator here. This initial value is 10 lakh and the end value is 9.28 crore, and the duration of investment 20 years is 25.43% CAGR. So this strategy for 20 years gave around 22% CAGR when back tested on Nifty 50 stocks. And it gave around 25% CAGR compounded annual growth rate when back tested on Nifty Next 50 stocks. Okay, that looks pretty good, right? Yeah, now let's go to the next slide. What are the challenges or assumptions that we have in this backtesting report? Okay. The first thing, the challenging thing was there are some scenarios where a stock can gap down open, as I just explained in the whiteboard, below your stop loss point. And it's not possible to exceed at the predefined stop loss. So in this case, the loss generally goes beyond our predefined stop loss. Okay, that's the reason you see the max loss per trade is actually around 15,000 rupees, not 8,000. Okay. So the good part is, the good news here is actually I handled that in my code. I took a lot of time to handle that, because when I go through the weekly candles, weekly candle open can be below your stop loss. Correct. So that is not sufficient, because you have to consider daily candle as well, because within the weekly candle, there may be some candle can be gap down open. The first candle maybe go through the your stop loss, or it may not hit there, but somewhere in the between, let's say on Wednesday, Thursday, the candle can directly gap down somewhere inside the weekly candle itself. That's a challenging part. So I have to code differently to handle that. Finally, I handled it, and whatever the report you see is proper as per the gap down price on the daily candles only, in terms of considering stop loss. And the second part, the most important part, is this backtest. Assume the Nifty 50 stocks or Nifty Next 50 stocks as on today's list. Okay, the same list is not true when you go back to 5 years or 10 years or 15 years, right? There may be many stocks actually removed from the Nifty 50 and the new stocks entered, right? But the backtest we did today is based on the current list of Nifty 50 stocks. Okay, the ideal backtest actually should consider the Nifty 50 stock during that period. Let's say you're backtesting 2005. So what is the Nifty 50 stocks in 2005? Let's say 2007, 8, 10, whatever. So in that year, we have to consider only those stocks and apply the backtest. But that is very difficult task. It's not that easy. First of all, I have to collect the data of Nifty 50 list for the past 20 years. And of course, that I have to store it in my local database differently. And I have considered my coding while analyzing the stocks on every week basis. Okay, that I'll try to do it. Okay, It will take a lot of time, but anyhow, I am planning to do it. I'll try to collect the data. In some cases, we may not get the data also if some stock is delisted, for example, and then in that case, we are not going to get the candlestick data for the stock. But even that is fine because there may be very few cases like delist cases from Nifty 50. Okay, but whatever the case it may be, whether it's doing in the current list Nifty 50 or we do proper back testing going back each year and take the Nifty 50 stack. But if you look at the overall strategy, this strategy actually based on the kind of momentum strategy. We enter the stocks which are actually moving up with some stop loss and a bigger target, right? And when the stocks goes below, let's say RSI level 60, and we are not going to enter. For example, if crash like 2008 happens, the bear market comes. So initially you will face the losses. Most of your stocks will hit the stop losses, and after some times you won't get any stocks to be selected to trade in that strategy. So that means you will be away from the market for some time. You may get some 1 or 2 stocks, but not all 10 stocks. Okay, that 1 or 2 stock you may get and again hit stop loss, again hit stop till the bear market turns into positive territory. Okay, that's fine. So considering that the overall drawdown may go to 30% in future, of course the backtest says is 22%, right? But we have to assume the more number in the real scenario. So the drawdown can go to 30%. You have to be prepared with that kind of drawdowns. Okay. How can I follow this strategy? Everyone may have this question. Okay. As I already explained, this is a simple strategy and can be manually traded by spending little amount of time every week. You just need to spend 15 to 30 minutes every week just before the close of the market for that week. On Friday, okay, or on Thursday if the Friday is already. Okay. If you're already having 10 active trades in your portfolio and no trade stop loss or target the end of the current week, you don't need to do any work. That means in some weeks you just sit idle, just watch your current portfolio because no SL hit, no target hit, you don't need to take any action. Okay. Only when a target or SL hit, some stock moves out of your portfolio, and in the next week, if you get any stocks for entry, then you have to take that trade. Okay, but you should not disturb the existing trades. Fine. How do you filter out all the stocks? Just open your broker terminal, have all the Nifty 50 stocks, the RSI indicator 14, okay, and just keep going one by one. Just first look at the RSI indicator. If the stock weekly RSI 14 is above the 60 or not. With 60, then you have to look at the chart. Otherwise, you just skip the stocks. Or only when the stock RSI value is greater than 60, then look at the candles. The current week candle is green, previous week candle is green, and RSI is greater than 60. That's it. If that satisfies, then you are going to select the stock. And after selecting all the stocks, just put those stocks in some Excel sheet, and the RSI value also you have to put in some column in the Excel sheet and select the entire data. Use some Excel facilities, features to sort the entire data based on the RSI value from top to bottom. And what are the top stocks you find, those you are going to take the trade. That's it. Okay. In many cases, you just need to initiate only 2 to 3 trades in a week, and sometimes there are no trades at all. That generally happens. As if you look at the 20 years, there are only 380 trades overall, right? There are very less trades. And after entering a trade, you need to keep stop loss or target every day, right? That's a tricky part. But it used to be a problem earlier, but now most of the brokers, the FIS, whatever you would take, then they are providing a GTD order facility where you can place an order for a multiple days validity period. You can enter a stop loss order or you can enter some target order in the system. You don't need to enter order every day basis, right? So once you enter, that may be valid for next 30-40 days. So in that way, you can actually stay away from the market. You don't need to interact with the market frequently. Okay, that's a good part from the broker side. So to execute this strategy manually. Okay, if you still have any doubts, comment out. Okay, or you can reach out to me on my email. I try to help you out. Okay, and for suppose you like this strategy and you really want to go with this strategy and for the next 10 years, for example, of course, you have to follow the strategy for the next 10 years if you decided to go with this. Otherwise, there is no point in executing this strategy on your end, right? And they are very important tools even when you start doing this strategy. Initially, If you have some doubt, you can just go with small amount of capital. Let's say using this strategy, just try to buy 1-2 shares. That's it, nothing more. Okay. Let's say still you get some confidence. Once you get confidence, okay, if you feel that strategy is working, you can go with some more capital and actual quantity. But whenever you started and you're ready to follow this strategy, please note, first of all, this is not a get rich quick strategy. Okay. There are times you don't see any returns for almost 2 years. Still, you need to follow it rigorously. You have a faith and just continue the process. That's it. Focus on the process, not on the outcome. Ultimately, the outcome will come after the end of long period. Maybe after 10-15 years, you'll definitely see the outcome. And you have to understand all the risk factors, max drawdown, unexpected future surprise, etc. Whatever it may be. There can be broker issues. We don't know, right? And the max drawdown as per the backtest report is 22%, but in reality, the drawdown can go to 30% as well. Correct? Okay, be prepared for it. Okay, and if you really want to follow this strategy, then as I said, be disciplined, exit your trade, predefined stop loss and target band. In case of gap down below your stop loss, just exit immediately as soon as possible. Don't wait for the stock to recover when your stop loss hits or if it's below your stop loss. Okay, blindly exit at loss. That's it. And on the profit side as well, don't wait for the stock to give more gains when you target it. Our target is 40% or 80% based on the stop loss to target. Once it reaches, just exit. Don't wait, it may give more profits. No, it is not going to work that way. And don't regret if a trade goes to 40%, for example, profit and comes back and exit your trade at 8% loss. You feel that, okay, it has gave 40,000 profit, now I have to exit at 8,000 loss. Don't regret. That's how it works. That's how the trading works. That's how you make profits in the market. This is all part of the game. If you don't follow this and if you try to apply your own rules and break the rules, right, then you will end up screwing up your system and you will end up making less than the Nifty 50 returns over a long period. You don't even make the 10% CAGR if you do all those stuff. Okay. Instead, if you follow the process rigorously, feel proud for not breaking the rules. And most importantly, don't apply your logic at all. Like, I will exit some partial quantity at this point. I'll put a trail sell or whatever. Okay, don't do all that. Just wait till your target hit. Complete target. Book the complete profit at your target. Of course, instead of 10%, instead of 10 times target, you can have some 9 times target, 8 times target, but that's okay. But that will eventually reduce your overall CAGR. But if you're okay, then you can do that. That's not a problem. But don't exit just partial quantity here. Don't apply your rules. And you may feel for the temporary satisfaction. You feel that, okay, you are smarter than the system and you feel proud for the temporary result. But in the longer run, if you look at it, you will fail, literally fail. I personally experienced this. Some people literally fail. When I gave some strategy to follow, they didn't follow. They applied their own rules, manual interventions in between. And overall, at the end of the year, let's say the system with its own rules gave, let's say, 30% returns, but they ended up in a minus 20%. The overall resulting in 50% deviation from the actual strategy. And just because of they applied their own rules, they ended in loss. So don't do that. Whenever it says this strategy or whatever strategy somebody gives, working strategy with some foolproof, and you just need to follow it rigorously without any emotions. Okay? Yeah, there's another bonus thing. I started my blog learnwithst.com. It's my own website. So I'm just creating articles over different strategies and their backtest reports, and also some learning. Not now, in future, I may come up with some tutorials related to stock market or coding related on this website. For now, there is a very less content related to some strategy I recently posted on YouTube. But in that site, I'll provide the complete backtest report that I show in the YouTube videos. The Excel sheet where you have each individual trade, weekly, daily, monthly, yearly, and the overall summary report, etc. Everything I'll provide complete backtest reports in each article. So that may be useful for you to do a further analysis from your side. Okay. And thank you everyone. Happy Deepavali again. I hope this video is very useful to you. Again, as a disclaimer point of view, I am not a SEBI registered person. I am not recommending anyone to trade in this strategy. Whatever you do based on this strategy, you apply your own rules, you whatever thing you do, whether you lost or profit, I'm not responsible for it. Okay, you are the only responsible person for your gains or losses. Thank you very much. Have a good day. Bye.